At the Madrid headquarters of Spain's largest bank, Banco Santander, the financial storm affecting the rest of the world seems strangely distant. 2008 net income was up, yes, up 9% to $11.4 billion.
The year 2008 has been the best year for Santander, and if we compare with international banks, we were the most profitable bank worldwide.
Juan Rodriguez Inciarte is on the board of directors at Banco Santander. He's also the group's strategy manager and has been instrumental in some of the bank's international acquisitions, including Abbey in the UK and Sovereign Bancorp in the United States. But for all its aggressive moves onto the world stage, at the heart of the bank is a very modest ambition to stick to what it knows best: retail banking.
Our business is very simple. We buy deposits from customers and we lend to other customers. So a bank by definition needs to be prudent, needs to control risks.
Prudence has also been imposed on Spanish banks in the form of what are called dynamic provisions. In the wake of Spain's last economic downturn in 1993, the Bank of Spain obliged all banks and savings banks to set up a special provisions fund to cover future loan losses.
The
dynamic provisions which the Bank of Spain established we consider to be a very shrewd and effective measure.
As former Director General of Supervision at the Bank of Spain, Pedro Villasante was personally involved in setting up the provisioning regulation, yet he still insists that the current strength of Spanish banks is actually more to do with their commercial business model.
It's a business model which permits recurrent earnings and relatively low risk rates compared to other models. And it's based on the real economy, not on complex financial structures or trading portfolios.
But the problem for Spain now is that its real economy is in trouble. Although the banks avoided the US subprime loans, they're now facing a deep slump in the domestic property sector and soaring unemployment. According to the Bank of Spain, the average bad loan rate is expected to reach 7% this year, up from 2.8% last October.
Bad retail mortgage loans don't worry us excessively because the experience has been that the loss from these loans is low. What does worry us is the exposure that banks have in the real estate sector and construction sector. Because there are some banks that are quite concentrated in that area, and the bad loans could be severe, and the losses too.
Banks that have been forced to take over failed real estate and construction companies now sit on a combined $56 billion of property assets. With over 1 million unsold homes in Spain, banks are likely to take a hit too.
Nevertheless, this means that they have a warranty, the collateral of the houses, and this is good. At least in the long term, banks may recover. Some institutions probably have problems also of solvency, of enough capital, but the whole of the Spanish banking industry is very solid.
In such testing times, and with one regional savings bank having already been taken over by the government, there is certainly no room for complacency. But as banking sectors go, Spain is in relative good health. If there are lessons to be learned from Spanish banks, it's go back to basics. More branches, less risk-taking. In other words, be a boring bank.
Depends what you call a boring bank. One of the things is that it's not so glamorous. We are not like investment bankers. We stick to basics. And now, going back to basics looks like, okay, this is what one should do. But obviously, if you had been doing that for the last 25 years, it looks like a hero. It's not like we are heroes, it's like we are doing what we had been doing in the last 25 years.
But hero or not, there are bound to be a few banks looking enviously at Banco Santander and wondering whether it might be time for them too to go back to basics.